Hey, it's Clay Trader, and this will be a video chart on oil, light crude. This is the oil that you hear when they talk about price per barrel and so forth. I wanted to do this one because, as I have noted here, we are approaching what I like to call a pay-per-view matchup. Tyson versus Holyfield. Um, whatever you want to say. It's a big matchup coming here. And why do I say that? Well, as you can see here, we have this downsloping green line, and this is the 200-day simple moving average. And if you're unfamiliar with technical analysis, there's two kind of moving averages that pretty much everybody uses. Not everybody, but they're universally known, and that is the 50-day, which is this white line, and then the 200-day, which, as I said, is this green line. And most people have those on their charts. And there is kind of a self-fulfilling prophecy that goes with them. Because everybody's watching them, they expect there to be resistance, or in the 50-day case, they expect there to be support, as you can see right here. So they're always crucial moving averages to watch. So to go back to what I was saying, we have the 200-day sloping down at a pretty steep slope, and it's currently valued at 63.32. Keep in mind this is dynamic, meaning it changes every day, and it's getting less and less. So each day that passes by, this price is dropping. However, oil has been uptrending for the past few months, so they are on a crash course, and that's why I'm calling this a pay-per-view matchup, because somebody's going to win and somebody's going to lose. If the bulls win, they're going to push up through here, and we're going to start to get candlesticks that keep on going up above this. Or if the 200-day moving average wins, then we're going to get something where it comes up and the candles are going to get knocked down and then start to trend downward. So it looks like this upcoming week could be the potential big battle. Like I said, we closed at 61.67. 200-day is valued at 63.30. So the price is not that far apart. Now, just because, let me take a step back. If the price does not get through it, just because that happens, that doesn't mean that oil's going to drop right back down. It might just mean it's going to go through a consolidation period. So with that being said, I also wanted to highlight some of the support levels to keep your eyes on, because lots of times the price will come up, hover around it, and then pull back some. Usually the price doesn't get right through the 200-day on the first strike, especially when it's sloping down like this. This is just showing that the overall long-term trend is down, so it may take a few attempts to get through. Now, could it happen with one push and one attempt? Yeah, but usually it takes a little bit of an effort and multiple pushes. So on any sort of pullback, what we're going to want to watch are some important support levels. And I'm also going to kind of make the analogy towards a thermometer, meaning if these support levels fall, as more and more fall, the colder and colder the chart gets, meaning the bigger and bigger the sign that this uptrend is breaking down. So the first support level, and actually a pretty key one, is this $55 mark here. As you can see, it was resistance here, resistance here, resistance here, and then when it finally did break, went on a nice little move. And technical analysis 101, when resistances are broken, they become support levels. So $55 is going to be a crucial level actually that we watch, and we'll want to see how the price reacts if it pulls back down to this level. It may not even get that far down there. We do have the 20-day simple moving average sloping up here, as you can see, this red line. So it may just pull back down here and find support at the 20-day simple moving average. But if that fails, $55 is really a crucial level that we're going to want to watch. The next support level after 55, if that doesn't fail, is kind of three in a row here. We have, and I'm going to make these a little thinner because I don't think they'll be as sturdy, but we have this $53, we have this $50 region right here, and then we have down here at about $48.50. And this 48.50 is basically the bottom of this whole region here, where the price came down and consolidated. So this, actually looking back, I need to make this thicker. I'm going to make this the thickest of them all, because if this doesn't hold, then I think we have much more downside, and my price target would be somewhere right around $40, as that's pretty much the next support level, but that would take quite a bit of a fall and turnaround for that to happen, so I don't foresee that. But this $48.50 region is kind of like the last stronghold for the bulls on this upwards move. Like I said, we can use these as a thermometer, and as each one fails, the chart gets colder and colder. But the chart is still in play for the bulls as long as this level holds, in my opinion. But that's kind of pushing it a little bit. Ideally, you'd want to see 55 hold, because that should be a pretty strong support level. But if it doesn't, you do still have some support levels underneath it before we have this big kind of gap here where the price could really fall. So it's worth keeping your eye on. But once again, the main point of this chart was to note that we are approaching a big battle zone here with a 200-day simple moving average. So it should be an interesting week to see how oil reacts as we're getting up close to this downsloping moving average. Once again, this was the light crude oil chart. Thanks for listening.